The two major challenges the market has faced is the higher cost of capital, rising interest rates, shrinking Fed balance sheet, in addition to the reduction overseas, and worries about the slowdown in global trade because of worries about tariffs. So on the global trade side, you could get some relief, of course, if there is not an agreement, because there's nothing to agree upon. It's an agreement to discuss about a potential agreement.
An agreement to an agreement.
An agreement to discuss about the potential of an agreement.
A deal to discuss a potential deal.
Exactly, because they're not going to have details to discuss on Friday and Saturday. It's going to be hopefully.
Okay, what if somebody storms out of the room? What if we leave Argentina, where it just doesn't look like we got anywhere?
Then we'll see tariffs go from 10% to 25% a month later. And that's going to be a problem because a lot of American businesses say they can handle the 10%, but a 25% tariff is going to be a big problem. Is
the oil drop good from a Fed perspective because it kind of pulls a little steam, as we said earlier on the show, from the inflation story?
It is, but remember the Fed tells you they focus on core. So, yeah, it may on the headline, but it not necessarily is going to have an immediate impact.
Well, maybe there's a chance, Peter, that they view it not as simply an oversupply story, but as fear of a slowdown story, in which case that could alter the Fed calculus.
It gives them license. It gives them optionality.
You've got the hall pass.
Exactly. That gives them fallback to make that decision. But the Fed has a problem. I mean, here they've raised, and everyone's criticizing them for hiking too fast. But the real Fed funds rate is still only 0. So does the Fed want to be trapped near 2% or near 0, which is what happened in Japan, or do they want to continue to get themselves further away from 0, which would give them opportunity to cut when you get the next downturn? Now, I know people laugh like, oh, the Fed's going to raise us into a downturn, but I promise we will have a downturn at some point. So do you want to have that downturn with the Fed funds rate at 2, or you'd rather have that at 3? And I'd rather have it when it's at 3.